Hi, and welcome to another daily recap. So, this is day 55, and previous 3 days I was absent due to some personal issues. So, this is day 55. I'm actually recapping you, and today there is no trades. And this is today 11, 2024 Thursday. So, let's jump into the precision analysis. Okay, we got in daily, we have a break of structure on the downside, swing break of structure on the downside, and now the prices fully started to pull back to the premium prices, and again now it's coming down. So this is the internal structure. These red lines are internal structures. Now the price is pulling back towards the internal range, and we can expect once the price reached here. So I was expecting the price to come down, but since you can see there was this demand here where the price tapped into this and showed some reaction of it. So what I expected is so okay, price can take the liquidity above here because this is actually a range. So price can take the liquidity above this candle and then it can start to come down, or price can just take the liquidity above this strong internal high, tap into this area of supply, and then it can start to come down. So that's what I mentioned here. Swing is bearish, internal is bearish, fractal is bullish. Looking to follow the bullish order flow in the daily, as it seems that the price may take out the strong internal high to mitigate the supply above it. So there are chances that the price can go and take out this strong internal high. Price is reacting off the demand nicely. Thus, I'm looking to take longs to follow the bullish pairs. So the 4 hour, um, you can see the pullbacks in the 4 hour. The swing is bearish, internal is bearish, and small internal is bullish. So this is the small internal. This is the swing structure. A strong swing high, weak swing low. And here you can see the pullbacks, these red lines, and these dotted lines are bearish pullbacks. In a bearish run to take out this weak swing low. And we are currently dealing in this swing range. This is a strong internal high and strong internal low, and price is in the premium prices, premium value of this internal range, and it has tapped into this 4 hour demand in 4 hour supply. So in daily, we are saying that price can take out this internal high, and then it can tap into this daily supply. Whereas in 4 hour, this strong high is still holding, and we can see a reaction. So once there is a failed reaction, then I will be assuming that okay, a price can take out this strong internal high. This is a bit zoomed in version and with annotations. So swing is bearish, internal is bearish, small internal is bullish. Price reacted off the 4 hour supply but did not make any bearish stop and also did not take out the 4 hour demand. So this supply, I mean this demand actually failed because price tapped into it. Sorry, this 4 hour supply actually failed because price tapped into it. And this is the chalk where this is the line where if the price made a chalk, then it would have added a more confidence to me that this supply was to hold. But there was no chalk here. All this was internal chalks. So probably this liquidity would be taken, and there are a ton of flow resistance liquidity. Once there is the buy side liquidity taken, a price will raid all the sell side liquidity. So that's how market works from liquidity pool to liquidity pool. So I was confident that since the price did not make any chalk and since the price is, building a low resistance liquidity, once the price, I was expecting the price to move further up to take out this buy sell liquidity and then push down. So that was my expectation for the day. And this is 1 hour chart. The 4 hour internal is actually the 1 hour swing high, and this is swing low. Then this is strong high, and this is weak low, and these are the internal structures you can see. And H1 is my medium time frame. I don't trade with M15 because I'm currently comfortable with H1 because of my job issues. Okay, this is the internal range that we are dealing with. You can see this internal range. I just zoomed in, and this is the internal range that we are currently dealing with. This is a strong internal low, this is a weak internal high. Price is reacting off from this area of supply. This is a good area of supply. It has 4 of 6 out of 8. And price can come into this demand, react from this, and then go further up to take out this weak internal high. Remember, the internal structure is still bullish in the H1, but we anytime this low resistance liquidity can be taken and the price can come down to take out the strong high to start the phase A. Remember, this is the weak swing low, and we are expecting this strong high to hold and the price to come down to take out this weak swing low. So that's what our expectation is. But since currently in the current price action, we can see the more bullish bias from the daily from the 4 hour. We can also look for the session volatility and use that as a guide to check whether the price is actually moving up or down. So shorts or phase B, but I would like to wait for more confluence before I take phase B shorts. Currently, I'm looking for phase C longs, which are medium probability as per the current time frame. Though the phase C longs are, kind of risky, but it's kind of medium probability because it has a high time frame narrative. So if there is a high time frame support, even phase C longs in appropriate region becomes medium probability. So this was actually my game plan actually. So this is the first session update once the London was over. Price went up and made a internal breakout structure on the upside. Looking to follow this bullish trend till the price hits the high time frame POI. Will wait only for an inducement to be formed, or the only liquidity available would be the below the POI, probably the HNIs. So this was the POI that I was interested in because price can come tap here and then go further up, but it does not have any inducement. So if the price forms a little inducement and then moves up and then comes down, then this would be a more high probable region. If there is no inducement formed and the price is coming off directly, then I'll be looking for this liquidity to be swept and then bearish change of character and then longs. Mostly that won't happen because the New York session is just three candles and the London is just two candles. So in totally five candles, I can't expect all these to happen. So there is a high chance that there will be no trades today. Also, that there was this bearish divergence which I didn't notice initially before I took the screenshot. Then I realized that okay, there is this bearish divergence which added to an extra confluence that the price can come down because price has taken swept the liquidity above the strong swing high. But once the news is done, once there was a red folder, I mean three red folder news were there. Once the red folder news hits and the price went straight up, and then straight down. So once this is 4 hour supply, okay, it's good. But before the medium time frame makes any chalk, I can't trade because I want to confirm the bearish bias. So I didn't take any trades once this candle appeared. That's all off the risk. So price tapped into the 4 hour supply and started to rally down. It's rallying down. No trades today. Simple. Maybe tomorrow I could start to play the phase three shorts as they are no high probability compared to phase A2 longs. Why they are high probability? Because price is coming off from a higher time frame POI. So tomorrow, I mean, today I took the screenshot today only. So if there is some sweep zone formed, I would be looking for shorts here. So this is all about yesterday, guys. So there is no trades because of news. So I couldn't capture anything. Okay, that's it for tomorrow. I mean, that's it for today. See you tomorrow with another daily recap. Thank you, guys. Bye.